Welcome to Dhanda, the Great Academy. Today, we're diving into the world of Forex trading, where trillions of dollars exchange hands daily. Whether you're a newbie or looking to sharpen your skills, this guide is your ticket to mastering the Forex market. Let's get started. The Forex market is all about trading one currency for another. Think of it like exchanging dollars for euros when you travel. But here, we're looking to profit from the changes in exchange rates. Every trade you make is a combination of two currencies, called a currency pair like EUR/USD or GBP/JPY. Forex quotes always come with two prices, the bid and the ask. The bid is the price at which you can sell the base currency, and the ask is the price to buy it. The difference between these prices is known as the spread. Now let's talk about pips. A pip, or percentage in point, is the smallest price move in a currency pair. For most pairs, it's the fourth decimal place. For example, if EUR/USD moves from 1.1000 to 1.1001, that's a 1 pip change. When trading Forex, you'll deal with different lot sizes. Standard lot 100,000 units, mini lot 10,000 units, micro lot 1,000 units. To be a successful trader, you need to understand different types of orders. A market order executes immediately at the current price. A limit order allows you to buy or sell at a specified price or better. A stop order triggers a trade once a certain price level is reached. A trailing stop helps protect profits by moving with the market. Which trading style fits you best? Scalper in and out of trades in seconds or minutes. Day trader holds trades for hours but closes by the end of the day. Swing trader holds positions for days to capture medium-term market swings. Position trader, the long game, holding trades for weeks or even months. Choosing a broker is crucial. Look for regulation. Make sure they are governed by reputable regulatory bodies. Customer support. 24/7 support is essential in a 24-hour market. Leverage options. Higher leverage means higher risk, but also greater profit potential. Spreads and commissions. Keep your trading costs low. Forex trading is risky. Here are some key risks to be aware of. Market risk. Currency values can fluctuate rapidly. Leverage risk can amplify both gains and losses. Liquidity risk. Not all currency pairs are equally liquid, especially during off hours. Technology risks, system failures, or internet disruptions can affect your trades. Forex trading can be a powerful way to grow your wealth, but it requires knowledge, discipline, and a strategy. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more trading tips from Dhanda, the Great Academy. Happy trading!